Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. You can learn a lot as a real estate investor from other real estate investors in both the things they've succeeded at and the mistakes they've made. Today's show will be a treasure trove in that regard as we interview a gentleman who's invested in real estate in 6 different decades. Lots of nuggets today on the Real Estate Guys radio program.
Stop for a moment. Why are you listening to this show? Are you dreaming of a bigger, brighter financial future? More personal freedom to live life on your own terms? What if there was just one skill that could make it happen? There is. Sales. Robert Kiyosaki says every entrepreneur must be good at sales. It's true for investors too. Sales is how you attract money, people, and opportunities. Sales is the skill used to negotiate deals and lead your team. Sales skills are essential to success. The good news is, it's a learnable skill. The great news is, we've created a 2-day interactive workshop to teach those skills to you. Make plans today to attend How to Win Funds and Influence People, Mastering the Art of Financial Selling. For dates and details, send an email to sales@realestateguysradio.com or visit realestateguysradio.com and look under events. Gain the skills you need to succeed. Email sales@realestateguysradio.com. or look under the Events tab at realestateguysradio.com.
Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. With me, as usual, is our co-host and financial strategist, Russell Gray.
Hey, Robert.
You know, we get a chance to meet all kinds of awesome people in real estate, and just at one of our events, there were all kinds of new folks excited about getting into real estate, and you can learn when you watch how new people approach the business. But one of our favorite things is to get around seasoned folks that have been there and done that.
Well, the time experience really shows its value is in uncertain times, uncharted territory, and you have to have perspective. It's hard to have perspective. There's a lot of real estate investors right now that have only been in the space since after the great financial crisis. They have no idea. They've only ever been in an environment where interest rates are falling. They've never seen interest rates rise. Some of them have never seen a stock market crash or a bond market crash, a credit market collapse. They've never seen a real recession yet. And so there's a lot of things that are going on right now that the wise old owls of the industry can see and put in perspective, because when those things start to happen and you're young and inexperienced, you panic a little bit. And our good friend Blair Singer says when emotions run high, intelligence runs low. And the time to have your wits about you is when everything is chaotic, because you have the ability to move into the chaos when everybody else is fleeing. How do you do that? You have listened to and hopefully have relationships with people that have been there, done that, weathered the storm, and can keep a cool head in chaotic times.
I remember the first presentation you did at one of my events before we were partners on the radio. You talked about the minefield and how if you're trying to get across a minefield, you don't want to go first. You want to see the guy who went first and where he stepped and then make your moves based on that. And I think that's a huge advantage today because you can watch and success leaves clues. I was talking this weekend with a person who was telling me how the interest rate on a loan that they're using to buy a home was nearly 6%. And they were like, oh my gosh, 6%, that's so crazy. My other home is at, 2.75. And I'm like, get over it, first of all, because that's just what happens. And how much is inflation right now? Right, 7.5. So you're borrowing at 6. So you're okay, right? And just with that little 30 seconds, they're like, oh, okay, right? But their whole world is about, I've been able to get loans at 2, 3, and 4%, and now it's 5.9.
Yeah, absolutely. And again, I just go back to this notion that when you have the ability to have perspective and you have access to people that have experience, and that should be one of the most important things that any real estate investor does, anybody does in any area of their life. But, here obviously we're talking about real estate investing, and especially in syndication. We spend a lot of time coaching syndicators because that's another level of responsibility. It's one level of risk to go put your own capital out there. But when you're going to take responsibility for placing other people's capital, one of the most important things that everybody should do that a lot of people don't do is build a really strong advisory board to put themselves in a position where they have a lifeline. You know, those old game shows where you have to guess or do something. And one of the things you can do is call somebody to help you. I think anytime you're in business, you've got to have people you can pick up the phone and call and say, hey, I'm faced with this situation. I've never seen these economic circumstances before. What do you think? Obviously, on our Investor Summit, that's what we do. Every year for 20 years, we've gotten together with a group of people, most of whom are way smarter than we are. And then you get together with a whole bunch of people that come from all walks of life, all different markets, all different product niches, and we all get together and talk about what's going on, what do you think, what's it look like from your perspective. You get that 360, and then you're just in a position to make better, more reasoned, more logical, more rational decisions.
In fact, our guest today will be making his 11th appearance at an investor summit. So he's been around the Real Estate Guys a while. And this is not some promotion for the summit because it's completely sold out. So sorry, as much as we'd love to tell you you should come to the summit, there's no room for you this year. So sign up early next year. But Tom Wilson has been in the real estate business in one way or another for 6 different decades. And that's an interesting perspective, right? You'll hear his story when we come back, and you'll meet our good friend Tom K. Wilson on the Real Estate Guys radio program.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
Hi, this is Brad Sumrock, and I'm excited to announce my upcoming 3-day apartment investor training event, Rat Race to Retirement. This event is where I teach my proven framework on how to find deals, how to fund deals, and how to close large apartment deals. Robert Helms is going to be participating. Tom Wheelwright is going to be participating on taxes. And we have a special guest speaker, Emmitt Smith, who is the all-time leading rusher in NFL history. But also, little known fact, he's made more money in commercial real estate than he ever has in football. Be there May 13th, May 14th, May 15th. It's the only training event this year of its kind that I'm conducting. See you there.
Join the Apartment King, Brad Sumrock, at Rat Race to Retirement, May 13th, 14th, and 15th in Dallas, Texas, or online. For all the details, send an email to apartmentmastery@realestateguysradio.com, and I'll see you there.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
Hello, this is Dave Lenniger, co-founder of RE/MAX International. You're listening to the Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Heard every weekend on this station and all the time at realestateguysradio.com. Now in our 26th year of broadcasting, for most of those years, we've known our guest today. Let's welcome back to the Real Estate Guys radio program our good friend, Mr. Tom K. Wilson. Hey, Tom.
Hey, Robert. Always good to be back with you.
Well, good to have you. Good to get to pick your brain. You know, we've had you on the show several times, but you were kind enough to come out and speak at one of our events. And, of course, you're faculty on the summit. And what we love about your experience is it's really, really varied. You know, there are people that get rich in a niche. But, Tom, you've done pretty much everything in real estate. So give us the nickel tour on how you got into real estate as an engineer and then kind of the different product types, I guess, that you've had experience with over the years.
Well, I guess I got into real estate without original intention. Went to get my first rental house that Fairchild had found for me. Found the landlord lived next door, and he owned 12 houses on the street. Yeah. No Ed Pilot college education, 38 years old. He was financially independent. It's what you call one of those aha moments. So most people said, oh, no, you don't want to be buying it. The price has gone up too much in the past. They couldn't go up anymore.
And what was the price of the house back then?
My wife's hand was shaking when we signed those docs. $30,200.
Wow. Good thing you didn't buy a whole bunch of houses in Silicon Valley for 30 grand.
Well, it was working pretty well, so I bought a bunch more.
Well, you did. All right, accidental landlord, and all of a sudden you figured it out, and you continued to have your day job, which I think a lot of people listening can relate to.
It helps. It helps to be able to qualify for loans at this stage of the game. So their W-2 job, has a role, right? It has a role for a while.
Absolutely. Well, I would say even more so, because one of the things I notice about you is that the way you approach real estate, your diligence, and the way that you analyze property, a lot of that's just kind of your personality from being an engineer, I think.
Yeah, when I went into real estate, my full time, I tried to convince my wife one day that, oh, honey, I don't do this the same way I did because, I'm not an engineer now. She says, honey, once an engineer, always an engineer. So you work hard to delegate, not collect data until the end of the world, make decisions sooner. So it's you have to discipline yourself to balance whatever it is that you kind of have a natural tendency for.
I think yesterday you introduced yourself as a recovering engineer. So exactly. Well, Tom, you built up a nice portfolio where you were living, which is kind of what people do. But, I like to say live where you want to live, invest where the numbers make sense. It wasn't too long until you identified another market. Talk about that process.
Well, after 30 years and 2 startups that didn't make it in high tech and a nice high tech career in general, I learned that I was making more money with the rentals I'd bought in the 70s that I'd been advised not to buy while I was sleeping than I was while I was working. So then I started interfacing with others who were investors. I always find that for myself, it's I learn best by asking others who have had experiences that I haven't, pick their brain and learn from that and follow that. So just like the minefield example that you brought up. So what I learned was that most investors by then had discovered that the returns were higher in other places. And up until that point in time, it was pretty popular misnomer, I think, that, you always buy your rental properties in your neighborhood so you can go fix the hot water heater. It's like, so we went, we studied the country, looked at all the data and the returns and so forth around the country. And this is 1998, and found that other places had much higher returns because their prices are not appreciated as much, and rents never appreciate as much as home prices do. So you can go back in time by picking a different product or location sometimes. So out of all that, I found I picked Dallas-Fort Worth for a number of great reasons, which still make it strong today, and started selling product in California and buying products down in DFW. And within 6 months, I'd replaced my VP salary from my last startup company and never looked back.
Well, and I remember back then you would be in the Bay Area teaching at meetups and different clubs about the Dallas market. I thought, man, this guy knows a lot about Dallas. Well, you had done the analysis and put your money where your mouth was, and that was just all for your own portfolio. And then you kind of made a transition, which I think will have some folks listening that can relate to, which is that you discovered there was more opportunity in Dallas than one man could take. And so you kind of expanded to help folks find Dallas as a market.
I did. And what happened was building up my own portfolio of 1 to 4s and multifamily properties. I ran across a condo conversion opportunity, and to my surprise, the local people renting and in the area somehow didn't get the math that it was cheaper to own than to rent.
Yeah.
So I thought, well, all of my folks back home where I'd been teaching, going to meetups and all that, they're pretty good at math.
Yeah.
So I took it back to them to see if maybe I could sell off these units back home, and the numbers are pretty easy for them to see, so we sold off that whole thing to folks back in my Silicon Valley area. So then that was kind of went back and sketched out a little business plan. I said, let's do more of this. So now I got my own portfolio, found that there was a market for something that I could bridge from where I could get access and bring that to folks that needed that kind of product. And away we went. So we wound up doing what anybody would do in that situation. We flipped 650 houses to them.
As you do. Well, and then, there's always the point that anyone who bought one of those houses is happy they met you, right? Because Dallas for many years did not appreciate. Cash flows were good, which is what attracted you. But lo and behold, like every place in the world, Dallas now has appreciated quite nicely.
But as it turned out, if you put that much higher cash flow than you get back in the high-end coastal cities like Silicon Valley and so forth, together with the modest appreciation they're having, the IRR was still better. And you didn't have the gamble of this cyclical real estate prices going up and down. So I was very pleased with that. And my number one priority, which you always have to figure out, what is your goal? What's the primary thing you're looking for? So it was cash flow to replace my salary at the time, my W-2 salary. So it provided the cash flow and also, as it turns out, later on we got appreciation, but that wasn't the goal, didn't need to, and I didn't care if the price went up or down, I was still getting the cash flow. So.
Such a great mindset. It doesn't matter what the value of the property is until you go to sell or refinance. And so many people are enamored of the equity in their house, and that's great, but if you're not doing anything with it, it doesn't really matter. Right? Prices come up and down. And you mentioned cycles. So before we continue on with the story, let's just visit a bit about that. Because one of the things is when you meet someone who's been in the real estate business for several cycles, they have a maturity that the enthusiastic person that's never seen, say, a downturn doesn't quite grasp.
I don't, since I've seen a number of cycles, I do not buy anything that I don't test it for, can it survive a storm? I have a good SEC attorney that handles a lot of my PPMs. And I remember one of the early times I met with him, I asked him a question. I said, may I ask, with all your clients, this is someone who's doing $500 million to $1 billion a year worth of syndication, SEC at PPMs.
Yep.
And I said, what would you say is the most common denominator for all of your clients who've been doing syndications that has made them successful? Of the ones that are successful, what is it? And he said, I haven't thought about that before. He says, I would say that they've always positioned themselves and the product they bought and the leverage they had so that it could survive a storm. And I hear something like that, I tuck that nugget away and I don't forget it. So I test everything that I'm going to buy. How could it survive a recession? At what occupancy is it still able to cash flow? That's one of the things that I do when we buy something, and it served me well. So in this last recession we just been through, we didn't lose anything. We had to stop distributions, but we never went negative cash flow, and we're back to where we were. So anyway, I think that's I think it's more important to minimize downside risk than it is to maximize upside return.
It underlines the point that real estate is not a get rich quick. Real estate has friction. If I'm going to buy a property and it goes up 50 grand, well, to sell the property, I got commissions and transfer tax and legal fees and all that. So the buy and hold mentality is you have to treat a property as though it's going to be in your portfolio a while. Doesn't mean you're not going to sell or exchange or something like that, but it is a great practice.
I love telling people that I think real estate's the best get-rich-slow scheme there is.
It is. Now let's get back to your story, Tom, because that all was working for you, and you were helping folks find the market, and you were the biggest customer of your own initiative, right? So, but then almost a decade ago, you got started into syndication, and the PPMs you were talking about, private placement memorandums, are when you acquire capital from individual investors. And I think this is an interesting transition because while you certainly met people where you lived that were interested in owning property, not all of them wanted to have to deal with the day-to-day property manager and all that stuff. So talk about that transition, not that you don't still own properties individually, but to syndication, because that's when we've really seen your business explode.
I've read that most small businesses fail because they can't scale, right? Yeah. They have personal skills and so forth. They can't scale. So I had this good, what later became termed in the industry as turnkey rental business, and using my engineering approach to kind of cookie cutter the standards for the financial numbers and what color paint you use and the whole things, and turned on crews to do that and and let them just keep repeating it. So then I was trying to figure out how to scale it because it got harder and harder after the crash to find product. It became a new asset class for investing. The hedge funds came in. They were overpaying because what they needed to pay back to their Wall Street investors was less than what it worked for most of us real estate investors. So in that process, I thought, well, let's set up a fund so we can start buying houses at 100 at a time and so forth. As we were moving along that plan, the market I felt overheated.
Yeah.
When I showed up to get my hair cut and I found the hairdresser was out there, I said, "What happened to Judy?" She says, "Oh, she quit. She's out flipping houses." I thought, "Uh-oh.
Oh, yeah.
we're in trouble now." So that's when we kind of segued over to looking at commercial properties. Of course, commercial includes multifamily because it's commerce,
Yep.
but all of the different sectors. So then I started looking for that in DFW, and then that was successful. And then our clients wanted to have more diversity in different markets and not just multifamily. So we went to be able to satisfy risk diversity in general and just to get enough velocity for product. One of my best brokers, I love to tell people, when they say, "Gosh, I've looked at 3 different properties and I can't get one to work." I said, "Well, one of my partners last year had 300 deals across his desk per day."
Yeah.
Per day. So if you don't have access to hundreds or thousands of deals, it's really hard to filter down the true nuggets. So that was part of it. We wanted risk diversity, and we wanted to get enough velocity. So to do that, we spread into other asset classes. Different classes become different darlings at different times, right? Warehousing or self-storage or, whatever. The market is thousands of markets, and even these classes can be a zillion different ones. You have to look at each deal. You can't just say, well, this is the asset class and this is the market I'm going, because you might eventually get it, but in the meanwhile, you're going to die on the vine and your investors aren't going to be able to deploy money with you. And I find that there are a lot of investors, once you build up relationship with folks, sometimes they'll get upset if you haven't had a new deal lately.
Right.
Because they're kind of now counting on you to provide a resource for them to deploy their money and their investments. So it's, of course, in these times, it's very, getting product is very difficult. It takes a lot more work to find it, and you've got to everybody has to get to the new norm of accepting, I think, a little bit lower yields. And so it's, so diversity is, asset classes has worked very well. You can have a building in one asset class in one place and with one type of tenant that does totally different performance than somewhere else. Like in Silicon Valley, there are a lot of people that think, well, no one will ever return to work, so I guess we're going to scrape all these office buildings, right?
Right.
Well, I've during the pandemic, I've bought 3 different office buildings in the East, and they're all in the 90s in occupancy.
Yeah.
Because you have a different kind of tenant.
Well, and you mentioned properties are darlings at different times, and this is the fact that the cycles aren't all the same. When you had a deal, I remember it was an industrial deal, and we did a whole show on industrial real estate because you had really gotten your head around what was the pros and the cons and longer lease times and all that. And we won't go through every asset class. We'll have you do that on the summit. We're asking you to do a kind of a commercial update. But yeah, you've been in retail, you've been in office, you've been in warehouse, you've been in industrial, you've been in multifamily. And not only that, all of that in different geographic markets too. It can start to be overwhelming. But what I admire, Tom, is you haven't been pigeonholed. Actors get typecast in a role, and sometimes investors do. And it's great when everything's going well. I'm the condo king. Okay, you're the condo king, and you do condos, and condos are great up until they're not. And then what? Right? But you've done a good job of reading the tea leaves, but also not just jumping to the next shiny thing. So this is that combination of discipline to watch the market and what the market needs, as opposed to coming in and saying, well, I'm a big multifamily guy, so I'm going to look for multifamily. Not that there's anything wrong with getting rich in a niche. You and I have friends that all they do is multifamily. That's great. Right now, it's really hard to get multifamily and cap rates are compressed. So how do you expand your mind to be open to the other types of investing there is?
Well, first of all, it's fun to learn about new things and explore different things. But of course, that's not the driving factor. I guess I read a lot and I talk to people a lot. Thanks in part to you and the real estate guys. I have been following a lot of economists that you've brought on the summit and that I've gotten to know, and that I've liked so much the venue you have and what it contributes to others. I've brought some for you, and so I follow all of that very, very closely, and just keep talking to others and just be open to change. I think one of my, I'd say two things that contribute to my success. Certainly, one is having great partners. Another one is, I think, changing the model once in a while. Moving to a different product when one thing isn't working. And I'd say maybe one of the bigger mistakes I've made is not moving as fast as I could have. So moving to different asset classes, moving to different markets, you put your filters on it for what you're looking for, but there's a good deal in every market and in every asset class. You want the numbers to work in your favor so that you've got an area and a product that has maybe more available ones to filter through. But it's the specific deal, specific tenant, the less tenants you have, the more due diligence you need to do on those tenants. We even, we hire third-party outfits that are folks that are ex-CFOs in big corporations, and they go research the financial background of the principals of the, that own the business. That's the major tenant. You look at the economy of what that particular tenant is, product or service is in. Where's their position competitively in that marketplace? How well capitalized are they? All of these things that you'd never think about in, say, multifamily, right? They're all quite different world, and you need to put more emphasis on different aspects depending upon what the product is and what the tenant is.
Our guest today is real estate investor and syndicator Tom K. Wilson. We come back, it'll be your chance to win a prize on real estate trivia next. You're tuned to the Real Estate Guys radio show. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
Hey, it's Robert Helms. Thanks so much for listening to the show today. I want to personally invite you to come see an amazing real estate market that combines excellent cash flow, offshore diversification, and what we affectionately call lifestyle investing. Come join me from August 26th to 29th in the beautiful country of Belize. The Real Estate Guys have been bringing investors to Belize for more than 15 years now, and our discovery trip is designed to show you the market like nobody else can. Sure, Belize is breathtakingly beautiful, the people are wonderful, and wait till you taste the food. But the real opportunity is the real estate investment potential. Demand for offshore real estate has skyrocketed since the coronavirus shutdown, and with retirees looking for lifestyle, the work-from-home workforce able to be productive from afar, and tourism coming back strong, now may be the perfect time to consider Belize as a place to diversify risk in your investment portfolio. There's all types of opportunity in Belize when it comes to real estate investing, including both long and short-term rentals, commercial and retail triple net properties, business opportunities, land acquisition, development, agriculture, and more. And as the only country in Latin America with English as its official language, it's easy to understand the law. Property rights are strong, and real estate contracts are in English. And at Ambergris Caye, a unique situation exists where demand for rentals continues to outstrip supply, creating a compelling environment for investors. So come see for yourself. Join me in August in Ambergris Caye, Belize, as we study the market, learn about the sustainable drivers, and tour lots of beautiful real estate. And like all of our field trips, there are no properties for sale during the weekend. Rather, you'll meet lots of local providers that will help educate you about the market so that you can follow up with them after the trip if the market is interesting to you. You've heard about Belize and the Real Estate Guys for all these years. Now come see what all the excitement is about. Plus, we'll have lots of time over meals and activities to talk about all things real estate. To get the details, go to the website at realestateguysradio.com and click on events where you'll find the Belize Discovery Trip. Once you register, you'll get information about our group hotel rates as well as travel details. So join me in Belize, August 26th to 29th. It's a beautiful country with lots of amazing possibilities, and the only thing missing is you. Go to realestateguysradio.com under events, and I look forward to seeing you in beautiful Belize. When it comes to successful rental property investing, it pays to be picky. Pick the right markets, pick profitable properties, and pick great property management. That's easier said than done, but we've got great news. Jerry Kerr and his rockstar team at Mid-South Homebuyers are going strong in Memphis, Tennessee, and Little Rock, Arkansas, too. So for a top-notch turnkey single-family home rental property, whether you're a new investor or have a large portfolio already, pick Terry Kerr and Mid-South for a truly A-plus investing experience. To learn more, send an email to midsouth@realestateguysradio.com. That's midsouth@realestateguysradio.com.
Hey, I'm Jim Grant. I'm the editor and indeed the founder of Grant's Interest Rate Observer, and you, ladies and gentlemen, you lucky people, are listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio show. Thanks so much for tuning into the program. If you've ever wanted to sell more, have more influence, be more credible, and build awesome relationships, then come on out to How to Win Funds and Influence People. It's our annual sales workshop. It's right around the corner. All the details on the website at realestateguysradio.com. We're talking today with Tom Wilson. He's been investing in 6 decades. Lots and lots of great ideas. More from Tom in a moment. But first, let's play Real Estate Trivia, your chance to win a prize by knowing today's Real Estate Trivia question. When you hear the question and think you know the answer, send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. First person that gets it right is going to get an awesome book called Success Habits of Super Achievers. Stories from Les Brown, Brian Tracy, Phil Collin of Def Leppard, yours truly, and lots more. You're going to dig it. That can be yours if you know today's real estate trivia question. Last week we were talking with Brian London and Dana Samuelson about precious metals. We asked this: which country produces the most silver? Well, Mexico consistently tops that list, followed by Peru and China. By the way, the United States ranks 10th. Here's our real estate trivia question for this week. Tom got his real estate start in a place called Silicon Valley. That's where all the big tech companies are in Northern California, and it's where Tom and Russ and I met. Here's our question: when did Silicon Valley get its name? Yeah, when I grew up there, it wasn't called Silicon Valley, but shortly afterwards, there's your hint, Silicon Valley became Silicon Valley and still is today. When did it get its name? If you know or just want to take a guess, send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. Give us your name, the answer to the question, and your physical mailing address, because the first person that gets it right gets this awesome book, Success Habits of Super Achievers. That's today's real estate trivia question. We're with our friend Tom Wilson. He's been investing for a long, long time, syndicating for the last nearly decade. And Tom, one of the things that you have to do when you decide to go out of your own town, and especially when you start to think about different product types, and you've done a great job at this, is assemble a team. You've talked about some partnerships, but when you go to a new market and you don't know folks, you have to find out who the A players are. Maybe just talk to us about some of the successes and some of the challenges you had building teams in these markets that understand these different product types.
Indeed. I always feel that it's more important to have experts in the specific thing you're investing in and engaged in, or at least consulting with you, even if that results in having to give up some of the pie so that you have a lower risk pie. So I'd rather have a smaller slice of that has lower risk. So I would say networking is certainly the way I've found all of the partners that I work with. If we have some element that's missing in a deal that we're looking at, whether it be the location where this particular product is in, or some uniquenesses about this product, or which is maybe a sub-asset of the general asset class, then I go pull in somebody from that to fill that gap. So even if I have a great team and they have their own property management company, then maybe if it's in another region, doesn't make sense for them to manage it from distance, but they'll manage the managers that take care of that. So the job becomes just like it is in any large organization. It becomes a management expertise job. You really got to go pick the team members. You got to be willing to let go of a team member that isn't working, which it's all part of managing a corporation.
Yeah, and as not only your property holdings have scaled, you've done more than 25 syndications, your internal team, the folks you work with every day, that changes as well. And part of what we talked about this weekend was this transition you make as you're looking down the road, how can I continue to have impact? How can I stay in the game, but maybe not work as many hours as you've been working? So that has to be done through team.
Indeed. As I mentioned earlier, that's the mistake a lot of small organizations make is they have very good skills at doing certain things, but at some point you've got to be able to either train others or find others that have those skills and then manage that. I tend to, I guess it's the engineer in me, I tend to, when I bring on a new team member, whether it be an employee or a partner, I tend to, I'd say micromanage a little bit in the beginning and, set up my standards, rules, so forth. And then once I feel like we're on the same page and they're doing well, then I kind of do the opposite of a typical, say, engineer or techie. I back way off and let them run with it and give them accountability and let them run that part of the show. I'll put in a little sidebar here that I think one of the things that helps a lot in growing a partnership is that to compliment people when they do something well. We're so quick as humans to go criticize things we don't like. And for some reason, we seem to be so short on complimenting. A compliment costs nothing. Costs absolutely nothing. And it's one of the best motivators there is.
And it's great feedback. When you do enable someone to go bump their nose and figure it out and step back a little bit, not helicopter, right? Then they are going to learn. They're going to learn from their mistakes, but they're also going to learn from their successes. And when you catch them doing something right, that's the behavior you want to instill. So that's such a good point. In fact, that's kind of how I'd like to wrap this up, is that you have been successful in lots of areas, which means you've had challenges in lots of areas.
But I've never had a failure.
But never a failure, right? Right. Winston Churchill said the key is to go from failure to failure and not lose enthusiasm. But let's talk about some of the lessons you've learned, because I think some of the things you've been through, Tom, both good and bad, are great for other folks who are maybe just coming up to glean those lessons.
Well, certainly partners, getting people associated with you that are great partners. I think that's one of the biggest contributors to my successes. When you have a failure, it hurts, but the tendency is to hide from it, run away. But that's okay. You may need a little grieving period, but then go back and analyze it and figure out what it is that kept that from working, and take those nuggets with you. And as you go along, you get more and more failures. The key is to have a net positive at the end, right? And the more failures, for some reason, I guess it's human nature, we tend to remember more and learn more sometimes from our failures than our successes. So I think that's important. I'd say don't get in too many different kinds of product and markets and so forth too quickly. Don't want to get too much on your plate at a time. At some point, you'll want some diversity, but focus.
That is a super good point, given the fact that we've just talked about all the different things you've done, but it's been years and years and years. You didn't just jump into the next shiny object. You're very strategic about it. So, doesn't mean you just want to do one thing, but get good at that one thing and then maybe add something to your repertoire.
And as I said before, have downside risks, I think, should be more important to minimize than to have maximized upside. Everything you look at, see how it did in the last recession, go back to. You're in an asset class in a certain market. Go back and look at the data. It's amazing how much data is available these days.
Yeah, and you talked yesterday about stress testing, and this is a really important part. I think a lot of deal junkies are always focused on the positive. They're playing offense. This is going to be a great deal. Here's all the reasons we want to be in this market. Here's all the reasons we like the product type. And you're really good at pointing those things out, having looked at a lot of the private placements you've done and what the product type is, and you build the story for the market. So you have to do that. But at the same time, you do have to be realistic about the downside. It's one of the things, by the very nature of syndication, your attorney is going to insist you have those risk factors, the things that could go wrong that you disclose. But it's not just the legal paperwork. You got to think through that stuff.
And you got to be careful about not being overly optimistic about the shiny new thing that you find. And at some point, if something seems to be just too hard to get it done, then maybe it's stop pushing rope and move on to the next something else. Even in a market like this, there's always another deal.
Yep.
Don't fall in love with your deal.
And I think your point, and it's a great one, you got to look at a lot of stuff. You may not have 300 deals a day coming across your desk, but if you only looked at 3 things, it's probably not enough. There's probably, you need to look at a bunch just to get perspective.
When I was in the, start off in the house flip business, providing rentals to investors, I was typically winning 1 out of 3 bids.
Yeah.
When I got out of it, we were putting out 40 bids per week and maybe winning 1.
Wow.
So that tells you something itself. So that's when I segued over. So it's when you have a model that's working or a baby that's you're proud of, it's awfully easy to just hang on. Doggone it worked before. Why shouldn't it now?
Yeah.
But times change and markets change and cycles change, and you've really got to be prepared to change your model. And don't wait too long to do it. And that's a time when you can maybe diversify a little bit, go test another model. In fact, when I started syndicating, and I'd made the decision just about the time you started teaching, and thanks for all the lessons that you provided that helped me be successful with syndication building. But in the beginning, I'm so sensitive about being responsible for and managing other people's money that I didn't do the first ones with investors' money. I did it mostly with my money and with my own personal sponsorship, because I wanted to test that and see if it worked. And then when it was working, I said, okay, now we'll segue more into this, and we'll stop the house business and move on into it.
One of the things that we notice when we talk to folks about making the jump from owning in your own account to raising money to do other deals, which we're obviously big fans of. Anyone who listens to the show knows we think syndication is the best opportunity in real estate. But the kind of folks who need to be in it are folks who are diligent, folks who do care about other people and their money. And that makes it difficult, because the big fear in syndication is what happens if something I do causes someone to lose their money. But at the same time, those folks need you. They aren't able to build the relationships, understand the market. They've got busy jobs. They aren't paying attention. So it is really a great synergy, but you have to have the talk. The investor has to know what they're trying to get out of it, and you have to understand the investor, not just your deal.
I've asked some of our investors at times, in periodic surveys that we do, why did you do this deal? Was it what'd you like about the product or the submarket? And it says, I really don't know enough to know. That's why I invest with you. I count on you to figuring that out for me.
Yeah.
So,
which is a big weight to carry, but then that's how you build a reputation as a syndicator. And then you have to own the challenges. And this is another thing that you've developed a great touch at, and that is when something goes wrong, you got to be upfront about it. At the same time, the diligent part is not to just freak out and start spewing the problems, but to really think through it. Can you speak to that?
Surely. You will have, if you're successful, you will have problems, and you have to deal with that. When we do, you don't spew it out that same day in a big email blast, but you don't want to wait too long either. You want to try to figure out what's going on, and ideally you come up with a plan A, at least A, B, as to how you're going to deal with it. And then if it's a small to moderate problem, then we'll communicate by email, because it's we may have 35, 70, 100 people in a deal. But if it's a bigger problem, really a game-changing problem, then it's time to pick up the phone and at least talk to your top investors and keep that communication going. The worst thing you can ever do is go silent.
Right.
Just because you freeze and in the cave, and one of these months, I'm sure we'll fix the problem. That's not a good policy.
No, definitely
not. People would rather hear bad news than to hear no news, which is kind of interesting, isn't it? Yeah. So, no communication scares people more than communicating something that's a problem.
And human nature, we love to give them the good news, but they're on your side. They're part of your endeavor. They aren't, arm's length. They really are what makes this business work. If we didn't have investors, we wouldn't have anything to do, right? So, boy, we appreciate all the nuggets. Great stuff today, Tom. Really looking forward to having you back on the Investor Summit. Last year, you got your big award for a decade with us, 10 years at the Investor Summit, and now you're in your second decade with us. So we're excited to have you back.
And of course, I've been following you and getting value from all of your education and relationships for 2 decades.
Yep, that's
22 years now, I think it is. And for some reason, it took me a little while to see. Sometimes I'm a little slow to learn, so it took me a decade to get on board on the ship. So I look forward to being back, and it's been fun exposing others to this great opportunity. So I've enjoyed bringing new people to the summit.
Yeah, that too, right, as the thing grows. So again, wish we had space. We're thrilled to be sold out, but also kind of sad to be sold out. But we'll do it again. So sign up early and often. There's Tom K. Wilson. You can learn a lot about what Tom does in our resource section on our website. Tom's got some reports and white papers he's put together. Tom, if someone wants to reach out directly, what's the best way to learn how they can get on your list or find out what you're doing?
Thank you, Robert. Tom at Wilson Invest, WILSONINVEST.com.
There's Tom K. Wilson. More when we come back. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
Real Estate Guys listeners, are you tired of losing real estate deals due to financing issues? Have you had enough of waiting on banks, lenders, and investor groups to fund new projects? What if there were a way to eliminate all the hassle and invest in real estate on your own terms? I'm here to tell you there is. Patrick Donahoe here from Paradigm Life. I'm an Investopedia Top 100 Most Influential Financial Advisor, and I recently wrote a best-selling book about the financial strategy that changed my entire investment model, and the one that could change yours. To get a copy of my book for free and learn how you can maximize your real estate portfolio by acting as your own bank, send an email to mybank@realestateguysradio.com. Don't make another real estate deal without reading my book first. Email mybank@realestateguysradio.com now to get your copy for free.
Hey, ever wished you could go back in time and do some tax planning? Now you can, just like Marty McFly. Lucky for you, a brand new federal law just made this possible with an EQRP to get tax deductions and reduce your taxable income from last year, so you can use that tax savings to invest in real estate, Bitcoin, gold, even your own business. Whether you're a full-time investor, doctor, government employee, even if you have 5 or 50 employees, the EQRP works and is your secret weapon, and now it's retroactive. Hey, I'm Damian Lupo, and we have your solution. By the way, if you got bad advice and used an IRA for an apartment syndication, you are sitting on a U-bit time bomb. But don't worry, there's a solution, the EQRP. The EQRP company is ready to help you get control of your money, kill U-bit, and help you pay way less taxes. Want to learn more about this strategy? Send an email to eqrp@realestateguysradio.com for my special EQRP report. Paying tax or letting Wall Street suck you dry is dumb. Your first step is freeing your retirement money by sending an email to eqrp@realestateguysradio.com today.
Hi, I'm Nomi Prinz, author of Collusion. You're listening to The Real Estate Guys.
And welcome back to the Real Estate Guys radio program. Thanks so much for tuning into the show. Hey, if you'd like to do bigger deals using other people's money, like Tom Wilson does, come on out to the Secrets of Successful Syndication, our 2-day workshop on becoming a syndicator or learning how to vet a deal as a passive investor. It happens in the middle of September in Dallas, Texas. You get all the details on the website at realestateguysradio.com under events. Well, every time I'm around Tom, I learn something.
Well, it's interesting because you guys talked about a lot of different things and you drew out a lot of the character qualities that make Tom successful. And one of the things I think that may have been missed that I think is really important for people out there is consistency and persistence.
Yeah.
Because, you look at Tom and his analytical mind, and he's very methodical about what he does.
Yeah.
And I've been around a lot of, really enthusiastic, hyper people, and they talk a big game. And it's kind of like the rabbit and the hare. You see the person that just takes off and they're going to do this and they're going to do that, and they talk big, and then their emotional enthusiasm wanes, or they hit adversity, they get distracted. and off they go. And they can't remain on task, on focus, follow one course until successful, the acronym for focus. And I would say of all the great character qualities that Tom has that's made him successful, as I've observed him over these last 20 years, that's probably the one that I think is the most valuable. And really, for anyone out there listening on the front end of their real estate career, whether they're just starting in real estate investing and just trying to learn how to make money in real estate, or whether they've mastered that and they're ready to go to the next level like Tom did into syndication, the secret isn't really how smart you are. It isn't really how energetic you are. It isn't really how lucky you are. It's just showing up and consistently, persistently moving forward, believing, A, that you can do it, B, that all the resources you need are out there and all you have to do is find them. You don't have to become the lawyer. You don't have to become the property manager. You don't have to become the developer or the finance expert. All of those people are available to you. You just have to solve the problem of putting the puzzle together. And I think when I look at Tom, he's kind of one of those kind of guys, an engineer that's kind of designing this machine or designing this portfolio, and he methodically goes about his business, but he's just persistent and consistent. And I think that's probably the thing I admire most about him.
We were talking last night, a bunch of us got together and just noticing that Tom's diligence and engineering side is often the traits of people that aren't on the other side, the sales and people, and yet he's great with people. He talks to everybody. He doesn't have a big ego. He is vulnerable, sharing on things that have gone wrong, but he's not bragging when he talks about a success. And that's also, I think, a really big part of what makes someone successful in this business.
Well, again, I'm trying to glean the things that you guys didn't say.
Yeah.
And one of the things that Tom used to describe himself when we were at dinner the other night, and I think he said this from the front of the room at our Syndication Mentoring Club meetup, he described himself as curious. And that word really has meaning for me because I actually have a book that I'd like to write called Curiosity is the Cure. And that's what it was for me. And I learned it from Tom Hopkins. When I first started in sales, I was afraid. I was afraid to pick up the phone. I was afraid of rejection. I was afraid I wasn't good enough. I was just afraid. And I see a lot of people who look at what goes on in the world and they see opportunity, but then they don't go for it because they're afraid. What I have found in my own life, and I think what I've observed in people like Tom, is that you can really turn fear into curiosity. You become emotionally detached. Gee, I wonder what's going to happen. I'm going to pick up the phone and call this person. I wonder what's going to happen. I'm going to make the offer. I wonder what's going to happen. I'm going to work on this project. I wonder how good I could be. I wonder how far I could go. I'm going to hire this person. I wonder how they'll do. And that intense curiosity allows you to look at data and look at it objectively. I think that's kind of an engineering analytical background, but it allows you to take action. You can be intelligent, but if we're coming from a place of fear, the data scares you, the risk scares you. He talked a lot about doing deals based on risk. And lowering the risk, not eliminating the risk.
Right.
Understanding I'm going to take a risk. I've mitigated as best I can. I'm going to he used the word experiment. I'm going to try this, see how it goes. And if it works, then I'll double down. That's a very methodical, scientific type of approach, but it's all rooted in that base foundation of curiosity. So I think if you just look at Tom's career and boil it down to the things that make him powerful, what Kyle Wilson would say is his secret sauce, it's consistency, persistency, and curiosity. And anybody listening can begin to develop those character qualities in their lives and really tune up or supercharge their ability to take effective action, which of course our show is all about education for effective action. A lot of people think it's, I need to know this formula. I need to know this secret thing. There's no secret thing. It's who you are. And if you cultivate the right character qualities in yourself, then you will begin to take action. I know I've had to do it myself. Many times. I mean, I came from a place of fear early in life, and then I was very, all over the place because I was always looking for the shortcut, the secret sauce. I had to learn to be disciplined. I had to learn to be focused. I had to learn to stay on task. I had to learn to be curious so I would keep moving forward and not let my fear hinder me.
Hey, big thanks to Tom Wilson for sharing his wisdom with us today and at the Investor Summit. If you're thinking maybe there's an opportunity to invest passively in these bigger deals, or you'd like to take the ball and become a syndicator, Well, then join us in Dallas, Texas in September for the Secrets of Successful Syndication. And in the coming weeks, we're going to announce a very special guest who will be appearing there. Someone who you know and I promise will love, who's actually been in the business longer than Tom. So those are the hints. You'll hear about it in the coming weeks. But in the meantime, you can grab your spot at realestateguysradio.com under events. Until next week, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors from attorney and rich dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.